Today, we're cracking open the latest financial report from Aarey Drugs and Pharmaceuticals. These reports can look pretty dense, just a wall of numbers, but inside is a story. A story about the company's health, the pressures it's under, and where it might be headed. So, our job here is to find that story, piece by piece, and figure out what it all really means. Let's dive in.
So, here's how we're going to tackle this. First, we'll do a quick financial checkup. Then, we'll get right to the big question: were they profitable? After that, we'll look at where their money comes from and where it all goes. Then we'll take a step back to get a snapshot of the company's overall health, and finally, we'll pull it all together to see what the numbers are really telling us.
All right, every good investigation needs a starting point. For us, it's the official report card for Aarey Drugs, covering their performance from July to September of 2024. Think of this as the first piece of our financial puzzle.
So, what exactly is a financial report? Well, you can think of it as a company's diary, tracking every single rupee that came in and every single rupee that went out. It's a lot like your own bank statement. It tells the story of your financial health. For a business, this is the most direct way to see how they're really doing.
Okay, let's get to the question that's on everyone's mind first. After all the work, all the sales, and after paying all the bills, did Aarey Drugs actually make any money?
Let's just put it out there. What do you think the final number was? What was the net profit for this last quarter?
And there you have it. For the 3 months ending on September 30th, 2024, Aarey Drugs turned a net profit of 1.6 crore rupees. This is what they call the bottom line. It's the cash that's left after every single thing has been paid for. So the short answer is yes, they were profitable.
But hold on, 1.6 crore. Is that good? Is it bad? A number all by itself doesn't really tell you much. To really understand what's going on, we have to zoom out a bit and look for a trend.
And this is where the story gets really interesting. If we look at the total profit for the first half of 2024, it's 2.8 crore. But now look at the same 6-month period back in 2021. The profit was 5.3 crore. That's a huge drop. So while, yeah, they made a profit this quarter, the bigger picture shows their profitability has been nearly cut in half over the last few years. And that is the real story here.
So why is their profit under so much pressure? To figure that out, we've got to pop the hood and take a look at the engine. Let's break down the money coming in versus the money going out. This is where we see how the business actually works.
Wow, okay, this chart just lays it all out there. In Q2, Aarey Drugs brought in a total income of about 105.2 crore rupees. But look how close the expenses are, 103.4 crore. That gap between what they earn and what they spend is razor thin. This is what we call operating on thin margins, and it means there's practically no room for error.
This brings up a pretty obvious next question, right? If expenses are eating up almost all of the income, what's the biggest culprit? What's the one thing that's costing them the most? The answer is, well, it's pretty overwhelming. Just look at this. A massive 99% of the company's total expenses for the quarter was spent on one single thing: the cost of materials. We're talking about the raw ingredients they need to make their pharmaceuticals. Everything else, salaries, marketing, you name it, all of that gets squeezed into that tiny 1% sliver. This shows you just how vulnerable they are. Their entire profitability really depends on the price of those raw materials.
Okay, so we know the company is profitable, but just barely, and the long-term trend isn't great. So now let's shift gears a little. We've been talking about performance, how much money they're making. Let's talk about stability. How strong is the company's financial foundation really?
This is a classic breakdown. On the left, we've got assets. That's everything the company owns, totaling 274.5 crore rupees. On the right, we've got liabilities. That's everything it owes at 138.9 crore. Now, the fact that what they own is nearly double what they owe, that's a very positive sign. It tells us they have a stable, healthy financial foundation.
But let's dig just one level deeper into those assets, because here's a crucial detail. More than half of the company's total assets, that's 142.4 crore rupees, are something called trade receivables. So what's that? In simple terms, it's a giant pile of IOUs. It's money owed to them by customers for products they've already delivered. And while it's technically an asset, it's not cash in the bank. This is a big deal because when you're depending on that many customers to pay their bills on time, it can create some serious cash flow headaches.
So, we've looked at the profits, we've looked at the expenses, and we've checked the foundation. Now it's time to bring it all together. What is the final story these numbers are trying to tell us? Okay, let's just do a quick recap of our key findings. 1.
Aarey Drugs is profitable right now, but that profit has been shrinking over the long term, which is a bit worrying. 2, their business is running on fumes, basically, super thin margins. 3, that's because they're almost completely dependent on the cost of raw materials. 4, on the bright side, the company's foundation is solid, they own way more than they owe. And 5, a huge chunk of what they own isn't cash, it's money they're waiting for from customers, which is a potential risk.
And this really brings us to the core problem, doesn't it? You've got a company with a strong foundation, but it's facing some serious challenges in its day-to-day business. This leads us to the big, forward-looking question. When your profits are shrinking, when your whole business model is sensitive to material costs, and a lot of your money is tied up waiting for customers to pay, what's your next move? What's the game plan for Aarey Drugs? That's the key question this financial report leaves us thinking about.